All right, guys, welcome back for another video. In today's video, I want to make the case for a commodities bull market and explain how that ties in with the Russian-Ukraine war, Russian sanctions, and ultimately inflation. So right now I'm looking at basically the oil chart on the weekly, and you can see that the oil's been in a sustained uptrend for a very long time. I mean, pretty much since the crash in 2020. Um, but now it's reaching prices where, it's starting to disrupt the global economy, national economies, and also individual citizens' lives, right? And that becomes a political issue, right? People simply can't afford to fill their cars. Um, and, ultimately that ties into inflation, of course. Um, the current financialized market is dominated by equities and bonds, with bonds representing the vast majority of the market. And, in the current inflationary environment with bonds basically at near zero rates, now starting to rise from zero, um, you have an environment where essentially bonds are the, on a risk adjusted return basis, um, the worst asset with a risk adjusted return ever in the history of the human race in this moment. So that's really saying something, and it's driving capital out of bonds. Really the only reason that capital remains in bonds is because of different laws and regulations governing reserve requirements, forcing certain people to buy them. If those laws didn't exist, you just see demand destruction. That's a whole other video in itself. Um, you know, Also equities suffer from that inflationary rising interest rate environment as well, because ultimately all equities are valued off of discounted cash flow analysis. And if the cash flow is the modeled in a currency that's being debased at an accelerating rate, then all the valuation metrics are invalid. And people don't know, they're using models to value it that aren't accurate, essentially. You also have the issue that, a lot of these companies, they, during the quantitative easing market, they levered up very heavily, and bought back their own shares. And then they were able to, sell those shares to the market at a higher price and use that cheap debt to finance themselves, to keep themselves artificially alive. Where you know, uh, if you see interest rates rise towards their natural level, um, which really we're not even close to what I believe the natural interest rate level would be. But even if we started to approach that level, you'd see a lot of these companies that have been artificially propped up, collapse, go out of business. And so it's just interesting that the Fed has, in their mandate to stabilize prices, they have a dual mandate to stabilize prices and increase labor participation. But in the effort to reduce prices, they've actually contributed to an environment where you'll probably see mass layoffs as these companies start to crumble. And anyway, that's the case for why both bonds and equities are no longer great investments for investors, and those represent the overwhelming majority of the investments in the space or in the entire world. Um, so that leaves you know that that sort of lends itself naturally to commodities, right? Commodities are scarce. They have a scarcity that's defined by nature, right? You can't print more of them. You have to actually do work and pull them out of the ground, or whatever other way these commodities are sourced. They have a natural scarcity, and in an environment of yield-seeking behavior on top of inflation, commodities are going to be king. And I think that's what we're seeing, especially in the energy sector. So these demand forces have been building for years, really. Um, but a lot of times, the market, there's a certain level of inertia to the market, and sometimes you need a spark to make that shift. And I want to make the case that the spark was the Russian-Ukraine war, and we can go there by looking at the ruble. You can look at the Russian dollar and the ruble. So Yeah, so you basically have the Ukraine war in February, late February, and then you see the dollar spike against the ruble and then sell off dramatically. And this doesn't look like a big sell off, but if you put it in terms of the Dixie, what the Dixie's been doing, or the dollar currency index during that time, it's been going parabolic. And the ruble has been going parabolic against that. So, during this whole period where the ruble has been, or excuse me, the dollar has been surging, the ruble has also been surging against the dollar. So you could describe this period of the ruble's price increase as the greatest period of price increase in the ruble's history ever in the history of the world. Um, now, there's no way for me to confirm that, but at least in modern history, recent history, um, and typically you see these dollar spikes in times of uncertainty. So a war starts, capital flushes into dollars, and a flight to safety, quote unquote safety, and then you see this sustained downtrend following the Russian sanctions. And I want to draw your attention to this this area here, this Executive Order 13685. Excuse me. No, that is not the executive order. Okay, they're not listing the Russian sanctions here, but these are a little bit dated, 2014, 2015. But essentially, what that's interesting that they don't even list the that I find that extremely bizarre that they don't list that. But um, as there has been incredible sanctions on Russia as of recently. The seizing of FX reserve accounts, different embargoes on oil purchases, and the oil embargoes have contributed to the rise in oil prices and the pain that Western citizens feel at the pump. But really, the most critical part of the sanctions was the seizure of bank reserves, Russian bank reserves, and not even necessarily just the central bank or Russian banks. Banks that were just doing business with Russia had their FX reserves seized. And this was a huge amount, an incredible amount of seizure. And that is, in my opinion, is the spark that ignited it. I think we'll look back on history in February 2022 or March 2022 as that spike that ignited that global shift towards the commodities bull market away from the uh, the previous era that we were in. And the reason why that is because the primarily the FX seizure, and bonds were this pristine collateral that represented no counterparty risk for all these foreign players, and they could buy treasury bonds, and then in a time of crisis they could rely on them, and and it was considered pristine collateral. Well, if in a time of crisis, if the U.S. government can just seize that collateral from you, you know, it, because they don't like you, then it's no longer pristine collateral. So this is the type of thing that will create a different dynamic, and that's where you know Bitcoin and other commodities, bearer assets come in. I mean, if you for example, if you have Bitcoin, right, nobody can if it if you're custodian of your own Bitcoin, that can't be frozen like your FX reserves. If you have gold reserves, you know, and you're a custodian of those, they have to come invade you to take them. Same thing with oil reserves, right? If you have a large stockpile of oil, they literally have to come invade you to take that oil. I can't just be seized overnight. So, that is, in my mind, the spark that's kind of pushing things towards the commodities bull market. And how that ties in with Bitcoin is this essentially So the Cynthia Loomis, she's, I believe, a Wyoming politician. She is pushing a bill, or she's introduced a bill in Congress to regulate Bitcoin as a commodity. And it's unclear if that bill will essentially make it through Congress. But essentially, the there's a lot to the bill, right? Anytime you have a congressional bill, there's a lot of different pieces of information there. But the primary thing about this bill is that it would define Bitcoin under U.S. law as a commodity, and therefore it would be regulated by the Commodities Futures Trading Commission, which would be a huge deal because, well, first of all, it is a commodity. If you think about Bitcoin, essentially what it is a native digital asset that essentially is monetized energy, and so it is a commodity closely tied to the energy market. So I think regulators are starting to realize that they're starting to regulate it as such, and that is huge. I mean, regulation is such a big deal for this space because I work for a major investment bank in their lending division, and I won't drop the name, but I also there are a lot of different regulations around what people can do with Bitcoin, right? You can't just go out and buy Bitcoin and put it on your balance sheet. I mean, there's just not regulatory clarity. But at these institutions, everybody you talk to, they all own Bitcoin personally. They all they all understand what it is. They all get it. But there's just this lack of regulatory clarity for the institution to start, embracing it, accumulating it, and building out a corporate policy around it and a business strategy around it because they're just waiting for that regulatory clarity. So I think this could potentially also be a catalyst for Bitcoin. If you see this bill getting passed, that would open the floodgates for incredible capital to flow into the market, and definitely something worth keeping your eye on because that will have a very real effect. And yeah, anyway, that'll do it for today's video. If you guys like this type of content, please just make sure to like the video, subscribe to the channel, and I'll catch you guys in the next video.